What's up, guys? How you doing? Noah, how you doing, man? Hope you had a great day today. It's almost the weekend, so maybe the market will chill out. We'll see what happens. All right. Yeah, so let's get into it. We have Bitcoin just on an absolute tear. It's been a wild run. And yeah, I want to look at some measurable targets where we can prepare for some consolidation because it's got to stop at some point, right? It's got to chill out. Chad, happy Friday. Wonderbar. What's up, man? Aaron? Soul Train? Doing pretty good. I was supposed to get my driveway fixed today, but they pushed it again 2 times now in a row. Been a big bummer, but it's all good. Moon all day, all night. Yeah. Yeah, it's been a crazy run. Like, ever since we broke out of the basically the flag posture that we had over here, right? We had this, like, confirmation formation here, and it kinda, like, helped dictate the continuation after using the valley area as support. And, ever since we got that full on confirmation, we just have been a full on out sprint. It's been crazy. But yeah, it's gotta get tired. We've been pretty much going straight up from here. A chart that I've been trying to monitor, but it hasn't been updating because of the latency of their like the APIs. As on chain exposed, I'm I'm basically expecting consolidation again when we get to the 1.73 or 74 level here on the REPL chart. Because at this point, we've had not once, but like, one, two, three, a little bit more here in the past, around like August 2017. Like, this has been a significant level before in the past where we seen it promote consolidation, but not as like not really efficient consolidation compared to what we've been seeing ever since like March of like 2024. Like, normally we range for about a month after hitting this level and then we continue our run. Whereas like this cycle, we've been ranging for like basically a half a year. And this one was about like 4 or 5 months, like 4 months or so. But now we're coming up. It hasn't updated yet here on our feed. We're seeing the last price on the REPL chart update was at the 109K level. And so it looks like there might be a 3-day latency on this chart. Because if we look at last time we were at 109K, it was on the third actually. And there could have been updated around this point here as well on the ninth. But yeah, definitely have some latency on that chart, but I'm going to assume that we're likely going to range again when we get up to here. And based on where we were at the time, like we could be at that stressor level now. We could have had from this, you know, crazy run up, if we could be at the 1.7 level now already. So this top is likely not going to be the top again. Just so you guys know, like I still believe that, like, based on this chart, that the actual all-time high will come in around the 2.35 level on the overheated zone inside the REPL chart. And at that point, really the plan is just waiting for the daily change of character to call the absolute top. But if we range again, that top keeps getting extended. Every single time we range, it keeps extending. I'm late, but what's up, guys? We haven't really gone through much. We're just talking about the on-chain data and how it could help us predict the next time we go range bound for a long period of time. Kyle, do you ever use multiple partial stop loss orders? If they're in the profit zone, I could see reasoning for that. Partials. Yeah, so if they're in the profit zone, yeah, definitely I might do that once in a while, but not very common. But yeah, let's look at the most recent price action here. We got the confirmation formation here for that continuation on the macro break. This confirmed that we're leaving the valley area and moving to the next one, or creating a new one in this sense, because we're going to price discovery. And in price discovery, like a big tip, guys, is to look at like psychological levels on your price feed, like the rounded numbers, in confluence to exhaustion on your oscillators and the order book sell walls. The order books have been pretty wild lately. Lots of frothed at the mouth FOMO buyers, but not very many sellers. And when it comes to the sellers, we melt right through them, and the buyers, we get slight undercuts and we bounce from them. And like we have a whole bunch of buyers waiting at 117K right now, but we still have confidence all the way down to like 116.7K. So a bunch of people still trying to get in between around like here and yeah, that's pretty much this whole zone right here. Like lots of buyers just waiting in that zone. I drew this zone not because of the buy walls, but I was aware of one when we came through here. I drew it because of the structural evidence of residual buyers. We got an OR block here. Kyle may be the devil. What's up, man? 666 is unacceptable. Yeah, what's up, man? Oh, you're talking about my subscriber count. Yeah, that's like 6,669. So you gotta get one more subscriber to fix that, or let's just get 100 subscribers. We'll fix that. Might take me a little bit of time, but we'll get there. Um, let's see what we have in the chat. What's up, Caliber? How you doing, man? John, Blue Star, Trip, Goldie Crypto, Bull Runner, Dusty Hunt. Don't say that 10 times fast. That's dangerous. Andrew, how you doing, man? What are you doing, man? $100 tip? I'm going to give that back to you. You know I'm going to give that back to you. Subscribe, guys. Thanks, man. I really appreciate that. That's insane. 7K incoming. 7K incoming. 7K. You're not talking about Bitcoin, are you? I really, really appreciate that, man. That's insane. You definitely broke a record for the highest tip I ever received. Appreciate that. And I haven't gotten into anything. But yeah, so I gave a little notification about basically if this low broke, it's like bearish and we could start a downtrend from here. I just don't trust shorts lately. The shorts they're always getting undercut to their measurable targets. The longs are always exceeding their measurable targets. So I would recommend, until we actually establish a safe range, to just focus on longs when all your rules are met, right? If we're like, for example, at a demand zone and you have an opposing change of character, then take those longs, and just focus on the one-dimensional trading for now. Because the shorts, if you get stopped out with this volatility, you could get stopped out in a time of slippage, because we're kind of like a low liquid state. So price action can hop past your stop losses pretty easily around these prices. So be careful shorting right now. And not saying don't short. I'm just saying, like, if you want to focus on like a higher probability, higher quality setups right now, then longs are probably your best bet. So these are my two zones that I'm watching right now, where we can prepare for potential confluence if we even come down there, because at this rate we keep getting undercut off the previous highs, and then we get the break of structure for continuation. At least that's what's been happening since the 9th, right? Every single time we broke a high, we retested the previous high, right? And run up. We have a pullback, come up, retest previous high, and We'll see if we're going to come up from here again. So if we get acceptance into this little local valley area, it's not very old, it's pretty young, then we could potentially see that rotation back up to this valley area high. And then from here, you could prepare for SFPs. But like I said before, just be careful shorting, all right? This is definitely a good SFP zone. I would still rather you if you're gonna be doing SFPs, try to focus on SFPs on the lower side and grab them instead. How do I buy Canadian super chats? I think it's based on your region. If you get it'll suggest a currency or something like that. I'm not 100% sure. 7K incoming. 7K incoming. Oh, you're talking about the subscriber count. For some reason, I thought you were talking about the price of Bitcoin. It's like, this guy's super bearish. Like, what's he talking about right now? Yeah, I appreciate that, man. Like 7K subscribers, that'd be sweet. I mean, next level. But yeah, I'll keep pushing value for you guys, and we'll get there eventually. And cool. How do I buy? How far are we with what challenge? We've actually only gotten one trade in so far. The challenge started at a really bad time because I wanted to do a very specific set of rules on range bound setups, and this was going to be most likely the most recent trade, but I didn't give the signal because based on the measurable based target, the R&R wasn't there, but we blew right past it like it wasn't even there. So that rule of focusing on the R&R based on the measurable based targets kind of kept me out of this massive rally. But my spot bags are still growing, so I'm happy there. It's just my futures account hasn't really been doing much. So I'm hopefully we establish a range soon, so I could start contributing to that growth of that challenge, getting us to $1 million. Max, how you doing, man? Welcome to the party. Yeah. I like that. I usually do 1K to 13 to 20K. BTC to 7K. That would be intense. That would be like next level. Seeing Bitcoin come back down there. But there's legacy support that if broken, I would not ever hold Bitcoin again. But I don't see us breaking that. Like looking back on the daily, our legacy support level is probably around 30 or 40K right now. I'd have to use different charts in order for us to monitor it, but we can look at this crazy momentum that we can draw on our chart right here. This macro momentum that's been holding up the pace of the Bitcoin's price action since 16K. And that could help us with a guide and when knowing to sell for the bear market conditions. But this isn't the only rule, right? We want to see a daily change of character reaction. We want to see price on the REP chart get to 2.35 level. The REPL reach the 60. I based on the historical evidence, we want to get the long-term holders above the 70 level, and we want to get the full new above 70 level, and the long-term holders above the 80 level, and then we prepare for incredibly strong sell pressure usually from there. So I'm pretty stoked that this bull market might be getting close to an end, but based on the data so far, it still suggests that we're only about halfway there. But yeah, it's just a waiting game right now. Are you compounding your account? Yes, we are doing compound risk management. So with a challenge, when we're trying to grow to 1,000, 2 million, we are going to be every single trade that we do is going to impact the next trade's risk management. So it'd be 1% of the account, but what if we win or if we lose, it'd be 1% of that new value. That way we can scale at a faster and faster pace. And I normally recommend fixed risk management because it's easier, just focusing on the same consistent numbers over and over and over again until you get to a new goal. But yeah, it does slow down your growth. if you're doing it that way. I normally recommend fixed risk management to beginners or people who already established an account size to help them cover their like monthly expenses kind of thing. I normally do fixed risk management because that where my account's at now, like I'd rather just, stick to risking to lose the same amount and then allocate some of my gains towards buying like dividend stocks or growing an account for real estate or building a side fund for buying some altcoins. Speaking of altcoins, let's go to the others dominance chart because we did just break an important key level. I'll pull that up in a second. I got another chart here. So the others dominance chart, we were talking about this yesterday during yesterday's live. So a lot's happened since yesterday. We exited this value area, right? And we had a pullback and we retested this high here, and then we got the higher high for break of structure. So that was evidence that we are likely going to leave this value area and move to the next concern, which is right here. This is like a little supply concern. Or at least it's telling us that a majority of assets are at a supply concern. But we broke our key level and we're above the 50-day EMA. We just barely closed above it yesterday, but ever since then, we've got this like really strong aggressive move so far. So this is telling us that a majority of alts have relative strength against Bitcoin right now. So congrats to anyone who's holding some alts that are actually running. For those of you who have bags that might not be moving at all right now, that's a warning sign that you're holding the wrong assets. You got to focus on stuff that's circulating the narrative right now, right? RWAs and AI, especially RWAs. Those are the ones that have been getting the most attention right now. What we have in the chat, can you look at H bar, please? What would be the possible high for this bull run? Thank you in advance. Yeah, let's look at H bar, see what it's doing. I'll pull up. Last time we looked at H bar was July 1st, so about 10 days ago. We were just talking about that low, looks like. Yeah, that broke, fall down to local barrier. But dang, yeah, look at it go. Now, where do I think it's going to go long term? I can find it out, but I can tell you where it's likely going to start seeing exhaustion, if not already here. This is the measurable based target right here for this regression trend that it's been in right here. So think of it like we've been taking liquidity along the way down to kind of like stack up to a pile up for a potential run to grab the liquidity from above us. So here, 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 and then eventually here. Now, if we zoom out on H bar, and we could see that that level that we're targeting for the regression trend is also the neckline to a massive double bottom posture, right? And what these double bottoms provide you is a measurable based target based on momentum. So from the neckline to the support level, you click and you drag and you put above the neckline here to give you an idea if momentum were to be maintained, where the price would likely get exhausted. And it's suggesting that if this neckline were to break and we see it act as support, that we could see a continuation up to these highs. So I'm really curious to see if that happens, but this is a big boss that it needs to break in order for that to be possible. And there are going to be barriers along the way that you need to watch, of course, like the previous value area low in confluence with these wicks here where liquidity could be resting. Now, I'm not sure if one of those is a wick. Let's see. Yeah, okay, it is a wick. I just got some drawings here. I just wanted to make sure it wasn't. But basically, the value area low, you can see that the last time here on the 4-hour chart that we just built, we had this SFP, right? See how the price actually came up, generate a wick, and then this one came up, grab the liquidity from that wick, and then close back inside the range. That was a huge warning sign that the value area was acting as resistance and that we're going to start a continuation down. And that same location, you're gonna have to watch in case there's pooled liquidity still there that could be used as exit liquidity for large investors. So this is the big boss needs to break. Then your primary bear concern at 26.7. Acceptance into here with the break of structure can allow a continuation to its value area high. And that's where I prepare for a potential exit or taking some off the table. And I believe that might be, yeah, it's very close to the all-time high of H bar. Now, I don't know what the price tag is going to be for H bar when the top is called, but I can tell you that Bitcoin is going to be a huge dictator of when you should prepare for your exit for your altcoins. So when all those rules are met that I talk about with the on-chain stuff, I do have a video on YouTube that you guys can check out on it, where like there's a checklist of when you should prepare for the all-time high. And I can make another like little more beginner-friendly version of that too, like another video like that. Now that we're getting closer and closer to the actual all-time, like the actual top. But yeah, this chart's gonna be your best friend when preparing for the altcoin season, and the altcoin season is your exit plan. So when the top is called for Bitcoin, you should prepare for the tops to be called for your altcoins very shortly afterwards. And it's usually 2 weeks to a month after the top is called for Bitcoin. Because the funds flow from Bitcoin into network tokens and then into like the lower market cap stuff. But yeah, that's H bar for you. I hope that helps you out, but that's what it's looking like right now. It's looking insanely bullish. I am a holder of H bar, but I am not a biggest holder as I should be. Almost everything I have is in Bitcoin, so I'm not super liquid to be able to buy alts unless I take some from my take a percentage from my gains from my trades and stuff like that. But I've been doing a lot of fixing around the house and stuff. The driveway was like $6,000. It's fun stuff. What do we have next? We have a request for Caspa. Yeah, let's take a peek. See how Caspa's doing. We probably have a Caspa chart. I'm gonna first before I jump into Caspa, I'll make sure I switch this to the 15-minute in case there's people using this chart. I got some crazy equal highs here. I'll look for a sell wall on H bar, by the way, right here around like 20 cents, 29.20. Just because the behavior of this triple top is just a warning. Whenever you see like a tweezer top reaction, the very first thing you want to do is look at the order books to see if there's a sell wall. Same thing if you see like a tweezer bottom, look for a buy wall because it could be a good indication to tell you to jump into a short. Is if you ever see a tweezer top and then there's a giant sell wall or a tweezer bottom, you see a giant buy wall, then it's think of it like a guardian to your capital that you could use for shorts. And then you just look left to find out where are your demand concerns to help generate an exit plan, right? So here's some like demand here. And we're seeing that we're also bouncing off a previous value high. So there's some confluence here. But yeah, tweeter tops are a huge indication of potential strong sell walls. Now if we go over to CAS, let's see how it's doing. I bet it's been on a run still. Yeah, it didn't even confirm the short that we were potentially planning for. You can see here we had consolidation at this time in this valley area, like really predictable valley area. Cash is actually pretty great for trend trading, and their ranges are so big that it feels like you're trend trading while you're range trading. But yeah, we never got that confirmation for a return down. We need to have that low time frame. It was like 15-minute change of character. Yeah. We wanted to have the 15-minute change of character reaction to warn us that we're going to come down, but we never got that warning. So we can delete that. Instead, we got a break of structure above these previous highs, right? And use them as support while breaking the 50-day EMA. So I think we were mentioning the 200-day EMA as well that we should watch out for with CAS. I don't know if we even have it on our chart. Well, we should definitely got it. Let's see what we have. Yeah, we don't have it. Interesting. I don't know why it's not there. Let's just add it really quick. It's moving average exponential. Wait for it to load here. There we go. It's default set to 9, so you got to update the length to 200. Change the style. I like my 200 EMA to be green. Helps me indicate when a bullish trend is going to occur when it crosses over the red. It's called a golden cross. Like here, for example, is the like a death cross. So we have price action above the 200-day EMA, which is great. So these are likely going to cross soon, probably in about like 4 or 5 days or so. And the cross itself can actually trigger algorithmic traders to jump into a trade if they are using it alongside of their if they're using it, if they're automating it on CAS. So like for example, here you could enter a long with an automated bot, and then when you have the death cross, it will close you out of that long. Like back and forth, and the win rate is actually pretty phenomenal, at least on Bitcoin. Altcoins, you definitely have to like look back and see the age of it, and I wouldn't trust it on any brand new assets for sure. And some of them don't even have a 200 EMA. But yeah, right now CAS is at a previous value area low from this range here that acted as resistance the last time we were here. And we generated the value area high here. It became flush with that value area low. So what we really want to see for CAS for a continuation to its previous value area high, close to 10 cents, is acceptance into this value area through a break of structure. So if we have a proper pullback of 2 candles, 2 consecutive candles, and then a higher high, just like we saw right here, right? So we have, technically, we got acceptance on the hourly time frame where we had this pullback, we tested this VWAP, and we got the higher high, basically telling us that we got acceptance on that in that value area on the hourly time frame. So our probability of going back up to that value area high is actually pretty high, but we just got to, obviously, we need CAS to chill out. Like you can try to get on the pullbacks using like Fibonacci from the high to the lows, or to the low to the highs to generate an area of interest for potential like retests. But you have to watch those highs as your first barrier concern for continuations. If we zoom in on the 15-minute time frame, we do kind of got that ugly posture where we're seeing signs of sell pressure right now. We're building a regression trend into that head and shoulders. Right here, we got this ascending regression trend. So liquidity is being taken from the top, right? And liquidity is being added to the bottom. So we're stacking liquidity right now. And the order flow is really good evidence of that. So if we have a close below this low right here, then we'll confirm not only a head and shoulders, but we'll break the momentum, breaking the regression trend, and we will get below the VWAP. So here, it might be a short-lived short coming down to the 200-day EMA. Wait a minute, is that even correct? That's not correct. Yeah, it's synced to chart. So I'm going to fix that really quick because it just threw me off. There's not the 200-day EMA over there anymore. So now that we know that barrier is not there, sorry about that, I would be targeting as low as here where the liquidity basically ends. And this could generate a range to fight against this valley area low and to eventually get a full-on break of acceptance into here before. Like we kind of like what we had before, but the last time we failed, right? Where we had that range-bound price action against that valley area low. And the point of control, this previous point of control, is basically flush with that regression trend target. So at that point, you prepare for definitely a bounce off of like 85 to 56 if that breaks to the downside even confirms. Let's see, previous POC here. Yeah, so I'll basically be targeting this level here if that confirmed. So go to the 15-minute time frame, use a horizontal array, and mark this as a key level alert that if we get a 15-minute candle close below this, we would have the confluence of the break of momentum, like a proper change of character occurrence, and the head and shoulders, and a break of the regression trend to start targeting the liquidity below here. Well, that's pretty much it for CAS. I hope that helps you out. Now that I've got the EMA set up properly, I could see that we're actually squeezed between it. The EMA, the 200 EMA here and the 50-day EMA here, which makes way more sense. After when we're looking at the price action, seeing the 50 in the lead is the more common thing to see when we're in an uptrend, and it being the lead for a downtrend. So it's kind of like it was weird seeing that for a moment there. Makes more sense now. So we'll have to watch our head being hit off the 200-day EMA if we do have that continuation up. Let's go back here. I hope that helps you out. Kyle is my Valley area. Thanks, man. Appreciate it. Let's see. Rock like Hitler. Watching descending broadening wedge on Bitcoin. 515 still looks active. Yeah, I see what you're saying there. Yeah, we got the descending. You said broadening wedge. Descending broadening wedge. I don't think it's. I don't see any broadening wedge. We could flush. We can have our momentum here flush with the bodies to make it more accurate, but it's broadening if you see the trend lines veer apart. So if you have like price action like this is like a broadening wedge, and it's descending if it's like this. Descending broadening wedges typically break to the upside because of the liquidity behavior. Like it's statistically more likely to do that. But if you see a broadening wedge, for example, break a key level and then come up and have it act as resistance, then it's way less likely to have it break to the upside because you're likely to see that break of structure generate a strong continuation. But they do statistically more likely break to the upside. I do see this as like a descending channel though, for sure. That's a lot of emotes that didn't pass through. I know what each one of them means, but okay, we're gonna have to make the best indicator known to trading from Canada. I actually been leaning more and more towards the idea of making indicators that will actually be helpful and just have it included as part of the membership or something. Because like there's either A, the paywall is really big for the good indicators, or B, the ones that are free just are crap. You can do quite a bit with like free indicators, like the RSI and stuff like that. And market structure itself is a free indicator. But yeah, I agree with the idea of like thinking of something super helpful. Market Cipher is good. It is technically a compilation of multiple indicators into one. And what makes Market Cipher unique is that it's using it's pulling data not from the active standard candles. It's pulling data from Heikin-Ashi candles. So it slows down its EMA progression inside of the indicator, but it didn't help increase my win rate. I was able to do the same basic win rate with the RSI that I was with Market Cipher. Not saying Market Cipher is a bad indicator; it's a great indicator. I'm just saying you might not need all the bells and whistles to become profitable. But yeah, Market Cipher is a great one. There's not Market Cipher B. That one's like a free version of it. I saw a Tesla with a plate, best TA and Gatineau last week, Kyle. I thought it was you. That's pretty cool. Yeah, that's my next vehicle is definitely Tesla. I wait for my I have a Honda Civic right now. I'm waiting for it to die before I buy something. Same thing with my phone too. Like I still got an S10. I got Samsung S10. I don't know how old that is, but people are surprised I still have like the older stuff. I don't need a rush to buy stuff that's not going to change your life in any way, really. What was the other quest? Do we check on Pepe? I have not checked on Pepe, but I could do that. I don't normally lean towards those tokens, but let's see. We don't have a Pepe chart, obviously, so I gotta pull up. I'll pull it up on Binance. When's the last time I've done TA on Pepe? Well, at least on in this chart, I don't think I have. Yeah. So easy. We got internal price action for Pepe inside this macro range that's been inside of since March of 2024, so about 500 days. And we pull a fixed range volume profile from the start of this range to the current price action to tell us the macro value area conditions. So this will help tell you when to prepare for basically swing trade shorts and swing trade longs. So like my rules will work on multiple time frames, but it becomes like a trader, like a swing trader's environment when you look at it on like the daily, right? So we look for the break of momentum, prepare for longs and shorts here. This is the buyer's momentum right here, right? This is the seller's momentum. The range from the value area low for the value area high, it's 100%. That's insane. So if you can just capture like 80% of that 100%, you'll be doing really well. We just had a bounce off of like this demand zone right here. So that's explaining why we're getting this bounce in confluence with the uptrending momentum. So you could pull a box here and to give yourself the reasoning as to why, like why did Pepe bounce? This is why right here. So we got a retest of this area. Let me just pull visual order, send it back. There we go. We are getting a golden cross close to occurring on the daily. We bounced off that area in confluence with the momentum. We broke down trending momentum here, internal momentum. And during that moment where we broke the downtrending internal momentum on the daily, we had the close above these local highs where we built this ascending triangle. And the ascending triangle target is stronger when it breaks to the downside after coming in from a downtrend like this, because the momentum suggests like if it were to be maintained, that will come right down to the value area low. But we broke to the upside. And the upside breaks are weaker with these kind of posture-based setups here. They usually only bring us to a measurable target of around here. But we got that extension. Most of the liquidity that's left is right above this high, and this high. So I could see Pepe, if we got the acceptance above this value area, easily continue up to grab that. That will be the measurable target for Pepe in the more macro setting to get up to this high here. Now this is the daily chart, so we can zoom in on the lower time frames to see if there's any weakness going on. We do see that there's a sell shadow wick forming, so there could be evidence in the lower time frames of a potential reversal, but we have to take a look here first. So locally, we do have this demand zone, similar to the reason why we started this run up. Pepe has got a bounce right now off this demand zone a few times. It's not fully mitigated, but it definitely got weaker. So send this to back. There we go. I need to go back to the daily for a second. I need to mark some of the levels because it takes a little while for it to populate on the lower time frames at times. So grab this. I want to mark it as the macro value area high. There's no sense in taking the time to do the macro point control or the value area low because we're not heading there just yet. But it'd be important when you're doing a short bound target. That's where you would target for Pepe longer term. Let's mark this level right here. Let's just call this a target. Where's my? So yeah, we're fighting this with a horizontal price action right now. We did just break. We got our first like candle close above these highs on the hourly. Sorry, so we're starting to see that form of price acceptance inside of the value area or above the value area high. Sorry, what we want to see is price action kind of give you like that 2 candle pullback and then a higher high within the zone. So you have that hourly acceptance, and then you have that higher probability of it getting a continuation up towards that macro target. One time frame at a time, basically. You do want to look left over here. So this will be your pre-alarm. You set an alarm right here, telling you to prepare for a potential SFP. It doesn't mean it's going to, but you can prepare for one. I'll set an alarm, not alarm here, but a at least some kind of indication of the wick. So when your alarm goes off, then you can look at the current price action to see if we'll get that sweep and a return back down. But remember, like SFP targets, their primary target is just the most recent low. So if we had price actions consolidate here for a bit and we grab that liquidity and close back inside the range, then you just be targeting here. And it's basically, think of it like an attack towards your change of character level. And if that change of character does happen, then you got a target extension and you can start potentially seeing it come down to like our demand zone right here, for example. But that's Pepe. I hope that helps you out. The right now it's looking pretty bullish still. We saw some evidence of potential exhaustion, but we got that we turned back up after we bounced off this demand zone. Similar to like Bitcoin kind of gave us that kind of vibes too, where we had some evidence of exhaustion here, like the 15-minute, but bounced off the like local demand zone. Kind of not fully invalidated the move down though. The invalidation for the move all the way down to these lower levels is if we get a price action close above here. So it's still looking low time frame bearish for Bitcoin, but it's building posture for a bullish move. All right. You check PP. Dude. Kyle, are you okay with closing the right side pane? Oh, I can do that. So people on mobile, I'm sorry about that. A little bit easier for you guys to see. Yeah, I can do that. We have request for AR. Yeah, let's do that. I think we got an AR chart. I'm gonna double check. AR USDT. I guess not. All right, we'll have to load up AR Weave. AR Weave's interesting. It looks like it's fighting a sell wall right now, though. Right here. Yeah, AR Weave. Like most of the fees you guys pay on Solana Network actually comes from AR Weave. I don't know what I was drawing on this. I must have been explaining some strong lows. Yeah, it looks like I was explaining strong lows. But yeah, the last time we looked at it was like way back here. We had this downturning momentum break. We broke our key level, and then we just started this massive rally up. But that was back in like 2023. It's been a while. We can delete this stuff. We don't need that anymore. We got this downtrending momentum here. We've got a double bottom neckline right here. So I'd mark that as a potential key level. We can delete this now. We don't need that anymore. Sweet. The measurable base target for this, this would likely induce a pullback and then a higher high because we got that supply concern that wasn't fully mitigated. This was the warning sign that when we broke this momentum here, that this would be the top of a potential range on the daily with a supply concern where we had this impulse move down, built a base, impulse move down. That was a big key warning sign that we'll have basically a ceiling for our potential range, right? And then we started coming down, bottomed out here. Looks like we grabbed the liquidity from these lows, which is a good thing. You want that to happen so that we have a like more of a higher time frame impact when this level breaks, and that liquidity could be used as a tool to help drive the market up for buyers, big players. We've got a internal momentum right here that we just broke past. But yeah, in confluence with this neckline, we're going to have the 200-day EMA in our face and the supply zone that wasn't entirely fully mitigated. So when we come up there, which I think we're very likely to do for AR, I think we're very likely going to have a continuation up until this point, just like we saw with Pepe. AR Weave definitely does have a lot more utility than something like Pepe. So I think your better bet is to focus on like AR Weave if you were to pick one between the two. So yeah, I'll be watching this as my primary target on the daily for this move. But if we end up breaking that neckline, then we could see a continuation to potentially as high as the momentum, basically. So I'll be trading this as your potential undercut level. If the sellers were to maintain the pace of this macro momentum, I would recommend watching the order books as we approach this because there could be a giant sell wall from market makers trying to induce sellers around this area. Now, here is a bit of a supply concern and confluence with that. So we have more reason to prepare for a sell around this area too. So I'd watch out. That all depends on the pace of the buy orders, right? If the pace of the buyers slow down, then we could have it break out around here, and then our target could be undercut at a lower level. And watching these lows in confluence with that, so that's all going to have a huge impact over like where the market makers might try to induce sellers. Now zooming back in, we could draw a fixed range volume profile on this from here to here. If we mitigate this whole entire supply concern, I would include that in the fixed range volume profile poll. We do have some double distribution. So we can see that we got like 2 points of key interest, little ones here and there, but this kind of tells us that price action will tend to move quickly between these two zones of interest, right? So that's why you're seeing price action here, like zip through, right? That behavior transitions into the volume profile and then has an impact over the future price action. And we kind of like zipped right through it. That volume shelf could act as support to help generate a continuation up too. But yeah, the next little boss that you got to be concerned about is up here for AR. We at the Valley area high, close to $7.29. So I can mark that here like this. Oh, it's not previous. That's more macro. Here we go. That's AR Weave. I hope that helps you out. We can zoom in a little bit, see what we have. And we zoom in, we have that on the hourly. Let's go to the 15-minute. We have a demand zone here, looking a lot like everything else. Send this to back. And we got a ascending triangle, which is normally created from a combination of FOMO and a big player trying to exit. So whenever you see a descending triangle or a ascending triangle like this, or like this, an ascending triangle is a warning of a big player trying to exit, but buyers constantly undercutting each other. And a descending triangle is usually a big player trying to get in, and sellers constantly undercutting each other. Eventually, we get to a squeezing point where either the sell wall is completely mitigated and the buyers break through and keep control, or the seller is too strong and there's not enough interest to break through it, and then we break down to our next demand zone where buyers are likely waiting. So this is a place where people are likely waiting for buys, but there's definitely a seller here controlling the market. And sometimes it's not a whale. It's not always a big player. Sometimes you're at a point where a large amount of traders are at a break-even point. On-chain data helps with trying to uncover that. Price action helps a little bit, but it's typically where you see lots of range-bound price action and a point of control. So if we're fighting against a previous point of control, that can help us with evidence on that, but I didn't see any evidence of that. Oh, yeah, well, yeah, we do have a lot of buyers that came in through here in the past. There could be some break-even holders trying to get out. All right, so that's AR Weave. I hope that helps. I will pull up Bitcoin now really quick. Then I'll close this down for you. $25 to $50K challenge, hit $40K today, 2 weeks. Nice job, man. Jeez. I love an ascending triangle. That's how the subtitles will look. Yeah, when it's edited. We have Alex O at the airport waiting to depart, spamming Kyle. Yeah. Oh yeah, he is on a flight today. We did a little short call today. But he's on a flight with his son. That's gonna be a nightmare. I hope he like sleeps through most of it, man. Because like it's hard enough as it is having a toddler in a car, going on like a 2-hour, 3-hour drive. Like I felt bad for you when you drove from Toronto to where I'm at to visit me. It's like having that toddler with you. It's tough. You have to take like stops like every like hour or two most of the time. But when you're in the sky, there's no escaping it, right? Have you gone in any trade in this pump? Not right now. So there was my day today has been a little weird. I'm supposed to get my driveway paved, but they kind of like pushed it. So I kind of moved things around just for that. And yeah, they didn't show. And yeah, and some things were kept me away from the charts. But no, I haven't jumped on any trades. I do want to see if there's a potential like long opportunity if we came down here, if we come down there. And depending on how this range might develop, like say we get like a potential SFP off these highs, I might be jumping in along back down here if we revisit this area. Because at that point we would have a range extension and we could prepare for this potentially performing as a good range to trade within. If like during the weekend, we might actually see Bitcoin chill out a bit. Let's see what happens. I don't have books to silence him. Real Ondo. Oh, I know you. Okay. Yeah. Papers on Friday. Good luck with homie. It's heat. They already drunk. Okay. What's the next quest? Ondo. We could look at Ondo. We got an Ondo chart. I'm a holder of Ondo. It's at 91 cents. It's ripping right through its barriers. It's awesome. I know we were talking yesterday about like this valley area high potentially acting as a barrier along the way up. We broke this macro momentum. We spoke with that yesterday too, and like that this was like basically an incredible opportunity to try to get into Ondo before it tries to run up towards its measurable target, which is at like $1.13 right now. Now, if we break past $1.13, and people are going to start screaming altcoin season for sure. So this neckline here, this double bottom neckline, similar to what we were seeing before with the other assets like AR Weave, H bar, they all kind of have this potential set up after like this macro regression trend break to generate strong continuations back to their previous highs. So right now, Ondo is fighting against a 200-day EMA and a previous valley area low as a potential supply barrier here, right after this wick was taken, right? So if we get a continuation from here, then our target will extend to here and then eventually to here as the final target. If we consolidate against this or above it, then we could have a potential strong continuation up to $2.14. That's the macro vision right now for Ondo. But one target at a time, right? You don't want to get married to your trade. If you see crazy warning signs at our key barriers, like listen to the market and take some profits and then find a new entry back at the lows. But right now it's looking hyper bullish. We just got to fight past this little boss here first. It's 200-day EMA. Like looking at the 15-minute, the posture looks similar to everything else. We've got this like little regression trend, demand zone at the low right here. We tapped it once, but we don't have to visit these lows again. I would like for us to consolidate a bit so we can catch the lows of the range so we can front run a potential continuation. Um, just keep constantly capturing the lows of a range and obviously listen to the range exit plans, right? Because just because we're in this crazy trend doesn't mean the trend will continue. Send it back. Yeah, right now, this is our key level for a continuation down. So we have 15-minute strong low. Yeah, we got to change character occurrence here. It's looking, yeah, right now it's looking actively bearish. We just, right now it could be forming a potential right shoulder, filling this fair value gap. I'd pull a fixed range, not fixed range, a fib from the high to the low to find a local key barrier, like the golden pocket. So if you're using Fibonacci as a part of your rules, this could be an area of interest to prepare for a potential retracement down. And if this level breaks, then we could start targeting this low again. And from there, we might generate a range if that does confirm, right? If we generate a range, then we want to try to catch the lows of the range to potentially front run the break of the range, right? For that continuation up. Because Ondo's still yet to hit its measurable target. Okay, I hope that helps you out. That's Ondo. Let's see, we got Bitcoin inching above its momentum right now. Scrolling back down to catch up. I resubscribed, Kyle. You are over 666. Right on. Thanks, man. I appreciate it. I like the stream. Thanks, man. Dutchy, Coma, no worries. Oh, you're just talking to a friend here. All of you have not liked the stream art. Yeah, that's funny. AVAX? Yeah, let's take a look at AVAX, Ben. So we have an AVAX chart, so I'll make it a little faster for us to do the TA on it. Cool. Okay, so we got a regression trend break to the upside after breaking this double bottom neckline. Those are always awkward to try to trade. Oh, undo that. We haven't looked at this in a while, but it's similar to everything else. Breaking macro momentum right here. Right, I'll make this line a little bit thicker for you guys to see. The last time we looked at AVAX was for a long, right? It was this break of momentum here, retesting off this previous value area. And we got the change of character occurrence, and we ran up. The measurable target would be the top side of the structure, and it blew past it a little bit, but then we came back down to our area. Pretty cool. We can delete that now, though. We don't need that anymore. We could pull a fixed range volume profile from here to here. This might be helpful for the future, so I'm generating this now. Because if we came back down to these lows, we want to be aware of the valley area highs and the point of controls for those consolidative levels. Just like how we're going to prepare for the barriers along the way up because of the consolidative levels. We can use their valley area data to help us know when target continuations are likely going to occur and to know when resistance might occur. Right now, we're approaching a supply concern. There's one right here that we've kind of like fully mitigated already, so I'm not going to mark that. But this one here, I'm going to mark because we haven't reached it just yet. So we need to be aware of its barrier. From here to here. Zoom, send it back. So this could be a supply concern. There are some wicks here that make things a little bit easier on the hourly for potential SFP structure. Send a there we go. I feel like that's also a fib level. I'm gonna pull the trend-based pull from the high, the spark of the trend to the low. Yeah, so like the top side of that zone is a gold pocket area. Now you could refine your zones by doing that, like if you're using fib as a part of your rules. And what I mean by that is like a second, just let me just fix this anchor. What I mean by refine is like you can make your zone smaller to have like to kind of like hyper niche your confluences. So you can do something like this, right? You know there's supply concern there. So you know there's confluence of that structurally. And confluence with that structure, we know that it could be an exhaustive point in the Fibonacci from this pump from the up to the upside leading into a potential area of exhaustion. So the efficiency of the market generated from Fibonacci here that could induce a reversal. So here I'll be waiting for a potential opposing change of character. Like if the price actually came up, right, like this, and we got that change of character occurrence, then you would be looking down and left to see if there's any barriers, right? And in this case, let's say, for example, we went straight up from here. Because we have this consolidative structure, we have potential demand here that could generate if we run up from here. It looks like it's trying to establish a previous high as support and mitigate this supply concern. Now we zoom in. It does look like it has some relative strength against some of the assets that we've seen. And I say that just because of like the posture. We've got a really far lead away from our previous demand zone. So if we break this momentum and we have, let's say we break this momentum and we confirm a short, like this would be our primary target, but we don't have demand that help to help hold it as much as we do with the other assets. So here we had like a really aggressive lead up. So this is a zone of interest that you want to watch, but we might not get there on AVAX. So initially just use this area here as an area of interest. I'll mark it as like local support in case anyone who's using my charts. We got the change of character occurrence already. So it's flipped bearish on the 15 already. But it's still, yeah, it's just still holding that momentum right now. You're going to need a full body close on the 15-minute below $20.92. You could front run this, of course, but I will let you know if you front run this that you're going to have to watch the barrier of the VWAP and confluence of the momentum and this key level of interest. So if we get the candle close below this, we're very likely to get that full rotation down here. An easy way to just guide you through that for anyone who's looking at the chart, like using this chart link, be from here to here. All right. We all know you have a hammer mark. Carl, no worries. The channel is safe. I'm with you, not running around with a hammer. I might need to get some like more mods. Actually, I just think about that now. I haven't had an issue in a while, but when you do have those chat issues, it gets pretty insane. Like the bots and stuff like that just come flooding in. XLM? Yeah, look at XLM. What do I think of Lux Algo? They have a lot of cool indicators. I did pay for it for a couple of years. But yeah, I never really came back to it. Like eventually, when you guys have your rules set in stone, you won't be shopping around for indicators anymore, right? If you know like all your rules are like set in stone and you have the win rate probability, you just go through that checklist over and over and over again. It will be boring, but it will be like honestly all you need to be profitable, right? And sometimes you might have a paid indicator a part of those rules. Um, and paid indicators are usually people chase towards them to try to become profitable traders, but really it's just about establishing rules that you back tested and you have a profitable win rate on them, and that you're able to be as profitable as the back test results in the live environment, which is harder because emotion will induce you to exit your trade sooner rather than later, and so the R&R might not be the same in the live environment. But that's when at least you know that your strategy works, but you as a trader need to develop at that point, and that you need to focus on your emotions or focus on um, a trade plan that you kind of like you set in stone for. Like you don't try to like adjust things last second based on like a green candle or red candle. Um, but nothing against Lux Algo. The only thing I don't like about them is that a lot of their indicators look back period is only 150 candles. So you can't do any back testing on most of their indicators to find out if you would actually be profitable with them. So like if you can't get that evidence, then you can't use that indicator, in my opinion, right? Or you'll be forced to forward test it, right? And that would take up a lot of your time. So you have to be in a live environment waiting for all the rules to be met to determine whether or not like that strategy is going to be working for you. And but yeah, and some of their indicators repaint, and repainting is the the scam of of the indicator industry. I just want to give out Alex, dude. I appreciate that, man. Well, you guys just in this one little session have paid me more than YouTube has pretty much in like 8 months. So I really, really appreciate that. Uh, not losing dollars, very exciting. So checklist good. Yeah. Yeah. Checklist is good. Yeah, we'll look at XLM for you there, man. Sorry about that. Dude, like I think you'll be a cool service for someone to just like be a laminator for rules. Just laminate people's rules and mail it to to their home. Here's the dry erase marker that comes with it. Your rules are all on this like laminated sheet, and you just check off the rules um, with this laminated sheet with the dry erase marker, and you just erase it when you're done, right? And you do not enter a trade until they're all checked. If you miss one of those if you miss one of those rules, then you don't have the statistical outcome of the backtesting anymore. You're jumping into the unknown, and when you jump into the unknown, that's when it makes it easy for emotion to slip in and influence your setup. When I lose a trade, then I know at least statistically I'm more likely to win the next one, right? Like that, you want to be able to have that kind of relationship with your trading where you can have a positive spin on everything, right? Like for example, when a trade immediately comes against you after you enter, that sucks. But you haven't hit your invalidation point yet, so just accept the price action and not close the trade too soon, right? But when it immediately comes against you, at least you know during that period that when you have your next break of structure, you can move your stop loss sooner. So try to think of a positive spin on all the negative things that happen during a trade so that it doesn't cause you to take negative action towards your setup. Um, man, Stellar's doing great. I bought some yesterday to use it. Like I like using Stellar to move stuff around. It's like my XRP, I guess. So I like to move things around from exchange to exchange with Stellar Lumens. And sometimes there's that arbitrage opportunity while you do that. But I wish I kind of held on to it for a little bit. It's intense. see, we do have this macro level, like this level here, but it's not going to be very helpful. It's not. It's no point of putting that in there. It's too. It's nice kind of seeing an asset that's meant for this not to veer too far away from its utility. It's pretty close to stablecoin, honestly. Got a downtrending momentum. We have a valley area from here until we left it right about here. You can see how it acted as resistance right there. Yeah, so we can leave this valley area to be helpful for the future. So let me just update it here. Sorry. There we go. Yeah, I pulled the valley area from the start of this range bound price action until I saw that it acted as resistance with the lower low. You'll eventually be able to visualize valley areas, guys, so you'll know like when to stop the pull. If we ended up getting acceptance back inside here with a break of structure, then I would continue that pull until that moment where we left it again. But yeah, so here we got a valley area low. We can mark that as a previous one, sorry. Then we press and hold control to clone. And then we press and hold control again, click to clone it again. And then all I have to do from here is just update the template. And I got a template for the previous valley areas, but I keep clicking the wrong one. There we go. So see how this could have been extremely helpful for you if you got that first opposing change of character at the valley area high. So looking at the current price action, you could see that once we got that opposing change of character right here and acceptance into the valley area, that could have warned you that price action is going to return back to this valley area low. And then when we get that opposing change of character on the low side, you'd watch the point of control along the way, just like you would along the way down, but you'd ultimately start to target the valley area high. And we broke that momentum, that macro daily momentum. We had eternal momentum here break. That gave us a run to the POC. But that point, you would have known in confluence with that point of control that we were retesting this more macro momentum to warn you that we might not get the continuation, right? But we got a low time frame double bottom here, right? It fractalized and broke the bigger double bottom. So from here, we're starting to grab liquidity from these highs. This is our next little barrier between us and the valley area high. It does seem like XLM does have relative strength against most assets right now, though, because it's kind of already more than halfway towards its measurable target. So it does make me feel like maybe we'd see XLM reach its all-time high sooner than most alts right now. We got I just want to mark this box zone here for you. We got here to here. Send back. Okay, so we tapped it already. We could SFP on the daily, but we need a pretty big aggressive drawdown below like 35.27. The 15-minute looks so. So this is the kind of reaction where you immediately want to look at the order books for Stellar. So see if potentially if there's a sell wall here from a player that could have induced this drop, and we could potentially build horizontal resistance against it. But make sure you check the order books to validate that, though, because this could just be one person with a giant market order too. We have a little demand zone here, nothing crazy, but we have the confluence of the we have 30-day and 5-minute order blocks and the previous point of control here. So this would be a good spot for a potential local range. If we do keep hitting our heads off this high, we could see it induce a drop back down to this point of control to kind of relax a little bit before continuing up towards this valley area high. Send this to back and buy confidence. Now, by the time we come back down here, this VWAP will likely would reset and cling on to the price action and start getting weak from there. But just because the VWAP resets doesn't mean you shouldn't take a previous VWAP seriously. We could come down and bounce off the previous VWAP area. So we don't have to come deep down to retest the point of control. We could test the ceiling of this demand zone, which is very, 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 very common. Just testing the ceiling of demand zone. It's actually when you start to range within it that you get a little bit nervous that we can get a continuation down. I hope that helps you out with XLM. Oh, thanks, man. Appreciate it, bro. Kyle, can you please look at XRP? If it's already done, no problem. Check after live. Yeah, I could take a look at the XRP. Have you ever tested order book strategies? Yeah, I've actually one of the first strategies I ever tested had to do with order books. Well, I guess it would be like this. Yeah, but the second or third strategy I ever tested was the order book strategy, where I was literally just using order book data to determine buy and sells. I don't recommend that. But like I was trying to undercut them with high leverage when I was back in my degen phase. And I would like buy right before they would, anticipating the bounce from like large buy walls of like 500 Bitcoin or more. Actually, back then, like 10 Bitcoin was taken pretty seriously for a wall. It was mostly retail when I started. And a 100 Bitcoin wall was like was a huge, which is kind of silly if you think about it, because like back then it was like $100,000. I guess yeah, relative to the current price action, it makes sense. But yeah, back then I used to undercut buy and sell walls all the time with high leverage limit orders. And obviously I was doing it at a stop loss. I was full degen mode. But yeah, I did a lot of testing with that kind of stuff. And I found that like the order books are great, but it's not the only thing you should use. Just like you shouldn't only just use the RSI to determine when you should sell, right? Or determine when you should buy. Or you shouldn't just use the VWAP. You should have a combination of rules to increase your probability. And the order books, what I like about them is that it's raw data. It's like active sellers waiting. It's not an indicator suggesting that there could be buyers. It's data telling you that there is buyers or that there is sellers. So having like a buy wall in confluence with your zones is just like reinforces everything for you because you know that there's sellers or buyers participating in the same area that you're looking at. But let's look at XRP for you, man. Matrix. Open XRP. XRP is really tightly correlated with XLM. So I bet it also went on a crazy tear. Jeez. Yeah. Okay. Yeah. Yesterday we were talking about it just breaking this momentum of this horizontal resistance induced by like a sell wall. And then we were talking about there could be turbulence at this high here, right? And there might have been in the lower time frames, but on the daily right now, we can see that we blasted right through it, right? Including this high here that I was nervous about. But now we're above the value area high. And let's see, well, we're starting to deviate away from it too. So this is our next area of interest, and this is our final area of interest here for XRP within this active value area. So around here, we could get an SFP. You can set an alarm here. Oh, we SFP'd on the hourly. That's weird. That's a weird one though. I know I already talked to you guys about that one SFP that we shorted the other day. It's so picture perfect. And this one's a little awkward. Like we had so we swept was that the body though? Let me take a look. The 4 hour body of the 4 hour. So wick of the 4. We just pull in the magnet here. And clone this too. And There we go. Now let's take a look. Yeah, still, yeah, technically an SFP. That's intense. So it's because we came up and we grabbed that liquidity and closed back inside the like active range here. We technically had a SFP, but like this young structure to generate a target, you're technically looking at these lows for your target, and the invalidation point is the high here. Oh, like when we were looking at the SFP last time, it was also an hourly SFP, and I was trying to get in within this area. I was being a little greedy. Um, I was using like fibs to determine a potential key area of interest where price action can come up and retest the area, and then I get like a better R&R setup than the actual confirmation itself. But it's looking similar to XLM, right? We have that crazy tweezer reaction um, after hitting that previous high. I don't think XLM hit a. Oh yeah, it's dipped into its supply concern, so there's correlation there. But yeah, XRP guys, like it's if we hold this support, I mean, hold above this value area, we could actually generate a new value area at a new all-time high. We just got to watch um, these berry concerns that can induce reversals. So I'm hoping that we see XRP consolidate up here to reset because it just went on a sprint. So if we get that proper reset, like that healthy reset, like new investors come in and old investors get out and take profits, it could help us create a new floor at higher prices. But yeah, this is our first little boss that we had to fight. We could potentially sweep this liquidity and come down and retest this value area high. And if we don't, if we end up getting a candle close above it instead, then we'll have a continuation to this little valley area here. And we can mark this zone, the fixed range from here to here. And we can mark our previous valley area low, which basically what likely induced this rejection, right? So we come up here, we'll have the confluence of the valley area low and the liquidity sweep here to potentially cause us to come back down to the valley area high. And we really want to see that valley area high act as support, or else if we get acceptance into this valley area again, then you'd prepare for the full rotation back down. But the vibes and the energy that I'm getting, it's very it feels like we're getting close to the rally before the season is called. Like this, I was talking about that yesterday where like we broke like the other's dominance level. We're going to see a lot of assets begin their rallies. And the rally is where you want to you buy, and the season is where you want to sell. You don't want to be buying with retail during the season because everyone's going to be told that the season's here, that we're going to be able to 100x your money. New tokens are going to pop up like crazy. And like the new tokens are likely going to rug you. You might make some money off them before they do. But yeah, you want to be getting out when everyone's being told about the season. Like, doesn't mean exit during that time, but it's the time where you need to prepare for like Bitcoin's top to be called. And then when it's told, I'll tell you guys when I'm selling my Bitcoin. I'll scream it through the rooftops. I'll tweet about it. I'll talk to you guys about it on YouTube. I'll post about it inside the community server. When I'm selling my Bitcoin, like everybody knows. And when I do, very, very shortly afterwards, the altcoin season usually sparks, and then they start their macro downtrend after. Top tier advice. Thanks, man. Let's go back to the Bitcoin chart, see what it's doing. I think it's likely creeping up a little bit based on price action that we're receiving here. Yeah, it's creeping up to the value area high right now. So we didn't technically invalidate the continuation down yet, but having acceptance in the value area after fighting this point of control as resistance, we're likely going to go to the value area high. And you got to listen to some of these the warning signs, right? Like if you had your stop loss here, for example, but you had horizontal resistance grinding against the point of control, and it breaks, you're likely going to get stopped out. Like there's no real protection after that. Let's see. How do you manage your strategies? Well, I only technically have like 3 strategies. So I will I will trade I trade ranges the most because the market ranges 80% of the time. So if you're a day trader and you depend on your trades to cover your expenses like I do, you need to have a strategy that you can participate in with a large amount of opportunities to cover those expenses. So, yeah, I have a value area strategy for my range bound trading. And when I see a confirmation of support off of value area, that's one rule to prepare for a trend-based setup. So they kind of speak to each other. So if I see a warning sign that we're going to be leaving a value area, it helps me determine a potential trend, especially if that value area is like over 30 days old, right? If it's like a 5-minute one like this, then I know that I'll be threatened by immediate barriers like around here. But if it's like a daily one, then I'll be looking at like daily evidence for barriers, right? So those barriers tend to give you like the swing bound setups. And then I have my macro strategy, which gives me my rules only align like once every few years for that. Like my macro strategy is like the one that tells me that the bull market is here or when the bear market is here. And the macro ones is what allows you to keep your your portfolio, honestly. So this was a profitable live. What's the balance at currently? Oh, right now, the $1 million challenge, we only have one trade in, and we lost 0.77%. So we're down 0.77% right now. So we're actually going backwards. So the next trade, the good thing about the proper risk management though, is that your wins are going to outweigh those losses. So we'll cover that loss and then some, right? So I wouldn't be too worried if you guys are just joining. And some people are joining in the thing just now. They're just joining now, so it helps. The weird market has given us time to like get everyone prepared for it. But once we start ranging, the signals will be a lot more active. If the trend, when we're trending like this, all you can really do is just sit on your hands. Unless you got a strategy that supports that, of course. Can you take a look at Jasmy? Yeah, look at Jasmy and Ethereum. Ethereum was the first request, so I'll take that one really quick. So open up Ethereum. Ethereum got the Batman head and shoulders vibe going on here. Look out. You don't want that. These guys are scary business. So if we go back in time, we have a structural. Oh, this is a really important key level. We were talking about this level yesterday. We didn't get that SFP. It ran through it. We broke through local resistance. Again, close that. Wasn't very strong. But this level is incredibly important for Ethereum. So here, this is the like a what is it, 30-day? How long is this? 153-day value area. Okay. So yeah, pretty significant value area right here. It helped control us when to know when to buy for these lows and when to sell for these highs. And it helped us as well in this area when we're doing our trades. And then when we had that deviation away from this value area, we got an incredible long off of it. And I got stopped out. I believe, yeah, I closed some around here, but I remember I think a majority of us got stopped out right here because we had that moment where we had that bounce right here. We had like and we broke momentum. So some people felt comfortable putting their stop loss here, but then it wicked down to grab everybody before continuing up. But it was still an incredible long. It was like, what was it? 1 to 7. So get 31% move. But yeah, then our current price action here helped us define, like when we got that break of structure higher high, it told us that we're going to have that rotation to the value area high again. And then we rotated back down to the value area low. We found support. And now we're trying to fight the same value area to get acceptance back in. And when we do get acceptance back in, guys, I think the price action is going to behave the exact same way it did before. right? We will have that cool down period for a few weeks. The market will chill out for a bit, and then we can start targeting the structural value area high again. And at that point, we find out if we're going to break this macro resistance level at $4,000 to bring it to all-time highs again. This is really the big, big final boss. Like, I'll take this more seriously than the all-time high, honestly. This level, $4,000. If we break past that, then we're likely going to the all-time high very, very shortly afterwards. So right now, when we zoom in on the lower time frames, we're getting evidence that we're kind of failing against it. We'll see if we get past it. It's kind of what's internally, it looks a little bullish from here on, but it does look like it's trying to top out, building that awkward regression trend. But we've seen consistently some regression trends break to the upside, even though it's more likely to break to the downside. So we have to watch a few key levels, like right here internally. There's a key level right here that, if broken, it'll induce a change of character occurrence. We just fix that. The run up might be short-lived though, right? So we have to be careful. If this breaks, if you're already in a trade, this is going to be helpful. But if you're going, it's not going to be helpful trying to get into a new one. The reason why is because I'll be worried about the R&R conditions from the long from here to the measurable base target, which is technically beyond this point. From here to here, this is the measurable base target. But like I said before, like, not all targets are meant to be hit. They might not get hit. So watch out for the local highs here where we could sweep the liquidity, then come back down. So treat this structural value area low and confluence with this wick pretty darn seriously. This level could induce the reversal back down really quickly. So if I were to draw a pathing tool for you, I would suggest price action to likely come down a bit first. Again, break. And here we could see a rejection. Now, if we instead lose this VWAP right here and come down, then we can confirm the bearish structure that I'm talking about, like this more like head and shoulders evidence we got going on here. When you see head and shoulders, think of it like there's better names for it than head and shoulders. Like if you look up Wyckoff distribution or Wyckoff accumulation, you'll learn about head and shoulders that way too. It's a little bit more formal, but yeah, if we break this key level here, we could end up seeing it come down to its measurable base target to the downside, which suggests a move of all the way down here at this demand zone. But it is a previous value area high, so there's lots of confluence for a bounce if we do come down to these lows. So mark this zone as an area of interest. So if we do come down here, it could be a great spot to prepare for a long. And that's at $2,832. I'll send this to back. Cool. Okay. So I will draw that a little bit better for you. Horizontal ray here. Body close for this setup. Body close. Potential bounce here. And then, yeah, right around here is where I expect a bounce from here. And those are the two paths that I could see occurring based on the current structure that we've got going on. And you could pull a fixed range here too if you like. It's young. So that's Ethereum. I hope that helps you out. So too late to average down on DOT. It's in your spot port. DOT's gonna be doing well, right? I wouldn't say it's too late. Like relative to its macro range for DOT, it's in a very low spot. But you can see the weakness though, right? Like we got or trying to get acceptance back inside of its macro valley area from here to here. And this valley area is about 1,100 days old. Now I could see it getting like locally, just like kind of like everything else, it's breaking momentum here. And it is suggesting that if we get to this neckline that we could have a continuation because of its posture, suggesting a potential like a large macro double bottom. It seems to be really enjoy these ascending double bottoms for breaks, but this macro one will be descending, which will give us a little more probability of a stronger move up. But yeah, here we're actually approaching on the daily. We broke past the supply barrier, like it wasn't even there. And now we're approaching the confluence of the macro valley area low right here and this supply barrier. So if we see opposing change of character here, you could prepare for a retracement bounce. We could look at the local price action, the lower time frames to find out a potential key area. And that around there is where I would maybe suggest averaging down on dot. Um, if that makes sense, man. But here, this break of this local resistance, we had this area marked for an area of interest for potential long. That would have been the best opportunity, in my opinion, to average down because you know you'll be jumping in on a position of strength after a break momentum and our key level breaking there. Let's zoom in on the 15 minute and see what kind of potential posture we have. Looks like we're building a regression trend again with this one too. And it's approaching the macro valley area low right here. So honestly, there's not much. This demand zone's super low like Ethereum's is. So I suggest taking each one of these like lows seriously. You see a opposing change of character at them. Like listen to the market and take some off the table if you're jumping in on any shorts, or wait for a structure to define a long, and then treat the high as a potential range high. Because if you don't break above it, then you might be forced out of your trade at getting a smaller gain than you anticipate. But yeah, here, yeah, we're building a regression trend. So the technical target is the bottom of the regression trend if it were to break to the downside. Grabbing liquidity from each highs, each of these breaks the structure highs, and we keep stacking more and more below us. So statistically, it's more likely to break to the downside, especially when you have the confluence of the macro valley area low here. The awkward structure right now. And the technical key level is way down here. If we get this higher high here, then it would be here. You might be able to front run it with internal price action. So we've got this little kind of like bear flag behavior. So if you get the internal change of character occurrence, you'd have to have this as your primary target. But if we break below this level, and then you have to watch out for this key level, strong low here. But when that breaks, you can start targeting down here. Extend your target one piece at a time, so you're not giving yourself like a hopium to hold your trade too long and you end up getting melted when it starts going against you. Okay. Coma, you entered long when the point of control broke. Okay. Careful, buddy. Yeah, there's a reasoning for a pump for sure, but not every trade should be traded. I'm just worried about your R&R on that. Your stop loss guard is here on the 5-minute, and you could be targeting the extreme highs, but your primary barrier is yeah, unless you got it during the active candle, not the candle close. A little scary R&R. Here it makes sense if you're targeting here. Just got to be mindful that it might not get there. I hope we get that break of structure for you so that we get that continuation. Okay. Kyle, any thoughts on syrup? Oh, yeah, you asked me that earlier. I'm sorry, man. Side pan. Oh, sorry. Yeah, fix that. So syrup. That's a DEX token. It sounds like a DEX token because every DEX token seems to be named after food. Maple Finance. Yeah, that sounds like a DEX token. I'll pull it up on Binance. That can't be it. Maybe that is it. Is it just listed? There's going to be more than TA that needs to be involved in determining whether or not you should invest in this. Because like this is, at least it's young on this chart. And what I mean by like more than just TA, like you need to do an analysis on like the team and their competitors and to find out what kind of market share absorption that SERP could have over those competitors. What network is it on? Is it easy for us to like absorb market share from those competitors, from those networks? Like SUI, for example, crushed it with its bridge. When it created its bridge against Ethereum, it took so much liquidity from Ethereum like a vampire. And that's why Sui did so freaking well. Uh, yeah, just obliterated Ethereum short term. But yeah, I don't really know much about Syrup. It's obviously is a finance token, so it probably distributes rewards. And if it distributes rewards, then its tokenomics is probably long term not great, but short term you might have yourself like a decent return. For example, look at any DEX tokens charts like Uniswap or PancakeSwap and do analysis on its current supply versus its previous supply when it was at its last all-time high, and you'll find out that this the current circulating supply has damaged it from the inflation, and it could prevent it from reaching its all-time high again. So, what I'm trying to suggest here with Syrup is not to hold this long term. It could be a great short-term hold for good gains, and when I say short term, I mean like maybe until the end of the year it might do well, or at least until the season, like the season. Um, but yeah, not one that you would want to potentially hold long term. And I'm saying this without doing any research on it, so take everything I say with a grain of salt. I'm just assuming that based on its name, that it could distribute too many rewards, that it burns and cause a high inflationary rate. So this is the level here that you want to have a break on the hourly so that we get that break of structure continuation. And at the same time, when that break of structure occurs, that would give you a confirmation of this momentum acting as a form of support. Right now, we are at a previous value area high. So if I do a fixed range volume profile from here to here, from the moment that we left, see here, we had it come up, act as resistance, come down. And during that time, we kept failing to try to get acceptance back inside the value area. But when we came back up, after testing this level a few times, we broke right through it, went to its value area high, and now we're coming back down and we're bouncing off the local point of control. So here, previous value area low, here, point of control. And then here is your value area high. Right? So we came down, bounced off the confluence of the point of control and the downstream momentum. So what you really want to see have happen is get a higher high here. And even another, a follow-up break of structure too, to know that we're leaving this value area and that we're not going to retrace back down. If we like that, this data could have been really helpful for short, right? When we swept that high here, and we know like we could target as low as the value area low if we got acceptance into it. But of course, point of control is a huge barrier concern that you got to watch when you're doing your shorts inside of value areas. So we got that bounce here. So let's see if we zoom in. We've got a break of internal momentum, and we're bouncing off it, and we're kind of coincidentally trying to confirm this momentum as support while also trying to confirm the macro momentum and support. So this is like the front run mini entry to the more macro version of it. Pretty cool. So this neckline here is basically the ascending double bottom neckline break here. But this is a supply concern barrier you're gonna have to watch. So if you get an opposing change of character here, I would definitely listen. We're probably gonna come back down, maybe even to as low as the value area low this time. But to get past that supply concern, then maybe we'll get that break of structure for the strong continuation. This is a potential front run to this. Hopefully you got in sooner, but yeah, this is the potential front run to this level. We're leading into the weekend, so I'm less like, I think it's gonna be less likely that we'll have these big runs happen over the weekend, but crazier things have happened in the crypto space. So now I hope that TA has helped you out a bit. But yeah, locally right now, this is where you want to potentially prepare for shorts. Or if you get the candle close above this level on the hourly, I would be a lot more cautious doing shorts. If you don't see any evidence of that hourly candle close, and maybe there's an SFP here, then there could be a good short opportunity to target these lows again. If we end up like failing at the supply concern and we come down, then this is a good spot to prepare for longs at the value area low at 52.72. We have a little micro demand zone right below it, so we might see some deviation. But let's see what happens when we get there. But yeah, this is a good confluence zone if we come down lower. I'm going to pull up this for a quick moment. And go back to Bitcoin. And close this. I got to get in the habit to closing that for you guys. Do you do trading on Hype token? No, but I should. I should be. I've heard Hype is a really good asset to trade in general. So I think I might add that to my watch list for assets to trade. Yeah, we got a Hype chart. Last time we looked at was on June 24th. Let's see what we were looking at then. June 24th. Around here. Okay, so this is the last time we were looking at was around here. So Hype, okay, yeah, we're talking about how Hype lost its momentum, like this broad momentum here. And we saw it act as resistance at the time, the last time we were looking at it, right? We're fighting against that momentum. We're kind of like mitigating like this supply concern here after we broke past this one and we hit that valley area low as a form of resistance. But it looks like here, we kept failing against like the point of control and we finally got that proper acceptance that while we retested this previous high and ran right past this valley area, like, and actually we're past this high too. Is this all-time highs? It is. Nice. So Hype's an all-time highs. So 100% of holders are in a profit. Congratulations to anyone who's a holder of Hype. Hopefully you didn't buy the top. Let's see. It looks like it really wanted to do an SFP here. And we did do an SFP here. Got a 4-hour SFP here. And a local one. Looks like it was short-lived though, bounced off the VWAP. But not much I can do in terms of TA for like look left confluence to tell you any warning signs anymore. So now it's about looking right, right? Look for the rounded price levels. And one thing that TradingView actually has on your charts for you by default is if you go to your settings and you go to your, is it status line? Oh, your canvas. Yeah, your canvas. And you see grid lines here and you choose horizontal only, these are all psychological levels marked on your chart, and it's relative to the time frame you're looking at. So this is I don't really need them. You can just look right for the psychological levels because they will block it based on like the time frame you look at. But it's kind of helpful if you look at this. You can kind of assume that you should be looking at the order books when we get approach those psychological levels because people like typing rounded numbers when they're trying to exit their assets with limit orders, right? Um, so find areas of confluence with the order books, the psychological levels, and then obviously you're going to need to use structure to define when you should be shorting or when you should be taking profits. Let me switch this back to none. I just find it a little cleaner without them. But the good news is we did just build like a potential demand zone, right? So as we come up, we now have an area of interest for the way back down to prepare for longs. And this is the whole zone right here. So if we get some distance away, let's say we go to like $48 or $50, we get a correction. This is going to be your area of interest that you're going to watch within that correction to prepare for potential longs again. And maybe we don't veer away too far right now and we like lose. Let's go to 5 minute. The structure is kind of ugly, but this here, this key level broke. We could see a return back down to its local valley area, but you have to watch the valley area high as a form of support, right? It's young. So if we do get this break, prepare for the valley area high, potentially act as support for maybe a return back up. If we get that break of structure up here after that bounce, then you're gonna see a strong continuation. But if we instead break this level and get acceptance of the valley area with a break structure to the downside, then your target extends from this valley area high to the valley area low, and you just got to watch out for the point of control along the way. The VWAP would likely reset before that would occur, so you don't have to worry too much about the VWAP. But the previous day VWAP would likely align with the valley area low, anyways. Okay. Hype doesn't make sense to me. I don't get why it has such a high market cap. It's because it is kind of like hype is trying to accomplish what was kind of taken away from Bitcoin, like a full decentralized area for people to trade. And so as you provide more liquidity to hype, you're essentially supporting a decentralized environment to allow people to trade without KYC or regulationary concerns other than your taxes and stuff like that. You can avoid the taxes. Well, you can, but I don't recommend it. but, um, but yeah, hype is it's basically just trying to accomplish what Bitcoin was kind of like made for, right? So like a fully decentralized, like non KYC trading platform. And there's other people doing it too. So you got to watch out for competitors that might create the same kind of thing. And I'm sure there's more to hype than just that. I don't own any hype, but yeah, only asset which needs hype is Karma. Karma's doing pretty good. We just did an airdrop today. We got a pump from the airdrop. So we had this bounce from this low here to here, but 27% growth. Let's see. About 5% of that was a result of the airdrop because the airdrops aren't the normal airdrops that you're normally seeing with most assets, right? With most assets, what they do is they take tokens that they have from their supply and they issue it out as a reward to try to attract new investors, right? Whereas Karma, yeah, we do airdrops to attract new investors with communities and stuff like that. So if any of you guys, by the way, want to reach out to me with a community that would like a free airdrop of Karma, I could buy some Karma and airdrop them to everyone in a part of that community. So just reach out if that's something you're interested in. But yeah, you got so Karma, we do buys it pumps, and then we give the airdrop. So there can't be any form of negative impact caused by the airdrop, whereas usually airdrops siphon away from the liquidity of the asset in exchange for hope that we get more holders and more buyers and interest of it, right? So, and what's nice about Karma too, if some people do sell some of the airdrop, it actually helps the liquidity grow from its tax system. So it increases the floor value automatically every time you see an airdrop. Yeah, Karma's got this massive double bottom formation structure here. If we get a break of that neckline, it could induce interest for buyers to bring the price action back up to its value area high. I'll pull the value area data here. I might have to reset up my settings for the fixed range volume profile. Deck screener doesn't always save it. Yeah, I got to reset my settings. So row size, I don't think 200 would work very well. No, so we have to do like a lower row size. Yeah. Style. Value area high, value area low. Changes to white. So this here is the value area high up here for Karma. So we could be fractalizing with double bottoms, preparing for a return back up to these highs. And people have been taking really good advantage of this range that's been in. And while this is all happening, the people who hold Karma earn more and more Karma from its tokenomic system. Oh, we have next. Didn't see it in the airdrop channel. Let me pull that up really quick. Well, there's these airdrop alerts. That's different. It's here that you'll get the notification of all the airdrops that occurred, right? And what percentage gain that you would get in confluence to your seed investment, in comparison to your seed investment. So this is technically would make you more money than real estate right now. Sad truth. Okay. All right, cool. You hold Karma and haven't gotten any. I could prove to you that you're wrong, because like with Karma, the one thing that's unique about its transaction system is that the transactions of the airdrops that aren't manually done by me, that are done through private transactions. So your balance, what you want to look at is look at your I'll look at a random wallet on Karma, for example. Go to BSC scan. Oh, I just did a bunch of stuff on the network here. Let's see. Sorry for the. Okay, so let's click a random holder. Go down to here. I don't want to go through a crap ton of transactions. Hopefully that we'll have one with a low amount of transactions. But basically, this is what you want to look for. This is a good example. This person's only bought like 1, 2, 3, 4 times, right? So you take the total of the amount of times you bought, right? You grab that total and you put it in your calculator, and you actually compare it to what's here. This balance will be higher than the balance shown for the amount that you bought, because through private transaction integers, you're getting Karma from every single transaction that occurs. So you're getting free Karma just by holding it. You don't need to put it into anything special. Like you don't need to stake it into anything. It's all done through an automated system. So every buy, every sell gets you more and more Karma. But yeah, that's how you track it, buddy. And then over here is like in the Karma server, this is just showing you like transactions that have occurred and how much Karma has airdropped to all the holders based on the size of that transaction. So this one, for example, at 1:30 today, everyone received a total of 42 karma. But that's split amongst all the holders based on their weighted ownership. So the more karma you hold, think of like each individual karma acts like a portion towards that weighted ownership, and it gives you more and more rewards based on your ownership. So it encourages people to buy and encourages people to hold, um, especially since this also contributes towards the supply constantly decreasing more and more and more. And as the supply decreases, it makes it easier and easier for karma to pump. And it's a very small supply already, so it's pretty easy to increase its value. It takes less money to pump karma than it does Bitcoin. What we have? What are your thoughts on Caspa? Oh, we already did some tea on Caspa. But it's looking strong, man. It's currently at an area of interest right now, similar to Ethereum actually, where it's trying to get acceptance to a macro important key level, like a value area for a potential continuation up to its value area high. But right now we're fighting that level right now. There is a CASP. You can type exclamation point CASP, not exclamation point charts in the server, and then you'll get access to all my chart links. Even if you're not a member, like, you don't need to be a member to get access to that. So you can see all my links, the last time frame I looked at it, and all that stuff. All right, guys, I gotta go. I appreciate everyone's tips. Like that was way more than I've ever expected. It's extremely generous. I appreciate everyone who's been following, subscribing. I have a lot of fun doing the TA with you guys. Like, don't ever think that like asking me questions during this or asking me to do TAs in any sense of burden. Like, I really enjoy doing this, and sometimes you guys get me looking at stuff that later on helps make the community a bunch of money. I can't wait for trade number 2. Me too, man. Like, that's the market needs to chill out. But yeah, thanks again, guys. You have yourself an amazing day. Hope you have a great weekend too. It's pretty hot here in Canada. Usually we're riding polar bears, but we have our polar bears parked right now because it's really hot. So stay cool, stay safe. Make sure you use your stop losses and have a great day. Bye, guys.